Welcome back to the Market Insights webinar. This is Kevin Prince from BMO Exchange Traded Funds. We're so glad you can join us from week to week to get different insights into the overall ETF marketplace. Today, of course, great session focusing in on innovative ETFs. But before we get into the actual core topic, let's go through the traditional disclaimers here. And what we're going to highlight a few things in the disclaimers. Number one, we're not going to provide specific advice, nor are we going to provide individual recommendations in this session. What we will provide you, of course, is some overall insights, in this case around innovation and innovation ETFs. And one more time, coming from the MSCI, which is an index provider that we leverage at BMO. These sessions will be provided for information purposes only. And again, we're not going to provide individual advice nor recommendations, but overall insights, in this case, innovation ETFs. Now, we have an amazing lineup of guest speakers today. And you know what I'm going to do? I'm going to let Danielle Neziel do that in just a few seconds and introduce all the guest speakers. Now, we always like to start off with these sessions with a little bit of tools and resources out there. Because we're talking about innovative ETFs, what we thought we'd do is give you a key website here for you to do some of your own research on these trends and these themes in the marketplace. And what we're going to highlight here is going to the MSCI website itself. You can actually pull core information off from them on thematic investing and dive into each one of the subtopics in regards towards thematic investing. And with that, let me bring in Danielle Neziel to introduce our guests. Danielle, over to you.
Hi, I'm Danielle from BMO ETFs. We are so excited to be here to talk about investing in the right side of change, and that's investing in innovations with BMO's innovation ETFs. At BMO, we recently launched 4 single theme innovation ETFs, which cover the 4 major platforms: genomics, fintech, autonomous technology, and next generation internet. We're also thrilled to bring to market our BMO MSCI Innovation ETF, which combines all 4 of those innovation platforms in a single ticker. And all of our innovation ETFs, of course, track the MSCI Innovation Indexes, which have been developed in collaboration with Ark Invest. We have Cathie Wood from Ark Invest with us today. I can think of no better person to set the stage for us on innovations and speak to us about the 4 major innovation platforms. Cathie is perhaps the most popular innovation investor and a leader in the space. And Christine Berg, Managing Director from MSCI, is joining us as well to talk about the MSCI Innovation Indexes, which BMO's innovation ETFs are tracking. So Cathie, thanks so much for being here today with us to talk about investing in innovations.
I'm really happy to be here, Danielle. This is an exciting day for innovation, I would say.
It's such an exciting topic. So Cathie, maybe we'll start. Can you give us some background to the Ark story and describe how you and your firm are identifying these disruptive innovation platforms?
Sure. Well, I founded Ark in 2014 to focus exclusively on disruptive innovation. The second reason I founded Ark was to create an open source research ecosystem and add new dimensions to research thanks to new technologies out there. And what we were seeing was an unmet need open up, a void in the public equity markets for innovation related stocks. And the reason for that is, indexes are where they are, and the stocks within those indexes are where they are because of past successes. But we have innovation platforms evolving now. DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology that we believe are going to transform the world completely. So they're very forward looking, they're not backwards looking. And the only way they'll be able to scale and grow exponentially is if they're funded and supported by the public equity markets.
So you've said artificial intelligence will absolutely transform all sectors in the economy, even those impervious to disruption. Can you explain or elaborate on that thought?
Sure. I think the most provocative example today is healthcare. And it's provocative for a few reasons. Most healthcare analysts, historically, have not been comfortable with technology. It moves too fast and it tends to rub regulators perhaps the wrong way too soon. And then on the other side, you have technology analysts who are not comfortable with healthcare, right? Well, guess what? They're going to have to get used to each other because the convergence between and among DNA sequencing, artificial intelligence, and the new gene therapies, gene editing technologies, that conversion is going to be explosive. And if analysts and investors do not understand that, they're going to miss, I believe, some of the biggest healthcare related opportunities, agriculture related opportunities that we have ever seen. And so we're seeing another example of artificial intelligence entering a space that no one thought possible. And that's the transportation space. So artificial intelligence is going to be critical to the autonomous taxi networks and the autonomous truck platoons and the parcel and passenger drones that we expect to evolve very rapidly during the next 5 to 10 years. Could not happen without artificial intelligence.
So when we talk about disruptive innovations completely changing our lives, I think there's no greater example than genomic innovations. And you've said that you believe the most inefficiently priced and underappreciated part of the market is genomics, and the most misunderstood is healthcare. And I've also heard you quoted as saying you believe genomic stocks will be the next FANG stocks. So do you still believe this, and what do you find so fascinating about the genomic revolution?
For the first time in history, now that we understand the human genome, we can sequence your genome and we can figure out what in your genome is mutating. Now think about this. We have 6 billion pieces of code in our genomes. We couldn't find mutations before. Now that DNA sequencing costs have dropped below $1,000, we think we're getting close to $500 now. And within 5 years, $100, or if you want long read sequencing, then $250. You know, nothing compared to the $2.3 billion it took to sequence one person's genome in 2003. That's how far we've come. Now that we can find the mutations, we can use new technologies like gene editing to reprogram the genome, edit that mutation out. A mutation is nothing more than a programming error. We're going to be able to edit it out. There are now trials evolving for diabetes, which we spend more money in this country on and around the repercussions of a diabetes. So that is going to be a grand slam. The reason no one thinks about cures is they've never happened before. We haven't been able to do this. And I still find it shocking that the 3 companies in the world with the foundational patents for CRISPR-Cas9, the 3 of them collectively that are starting to cure diseases, and we're seeing that, account for less than $25 billion in market cap. Now think about this. Apple, $2 trillion. These 3 companies, $25 billion. Now, Apple has transformed the world and it wants to get involved in healthcare, but it is not going to cure disease the way that these companies are, and they'll get royalties on every therapy developed with their technologies.
Let's move to the internet. So this is probably the largest innovation that we've all witnessed in our lifetimes play out over the past several decades. Cathie, where do you see the internet going from here? Will the next generation of the internet be just as impactful as the first? And will those FANG stocks continue to dominate and be the beneficiaries of this growth? Or do you think there'll be a new cohort of companies that will emerge?
Well, we do believe that the FANGs will continue to do well in here. Now, what we see evolving through the internet right now, and because of the internet, is really artificial intelligence taking over. It's software 2.0. And I believe today in the market, the global marketplace, artificial intelligence related companies account for roughly $2 trillion in market cap. We believe that number is going to $30 trillion in the next 10 years. Think about that. The overall market, I'm a little bit out of touch with the overall numbers, but they're roughly $100 to $125 trillion in market cap globally today. Here's how we see AI moving the needle: 2 to 30 trillion. That's a 50-fold increase. That would be a 17% compound annual rate of return. The strongest growth taking place near term, so much higher than that right now. In fact, there's a land grab out there because the companies who embrace artificial intelligence and collect the highest quality data and the largest pools of data are going to be set up for winner take most opportunities. And it is because of AI. The traditional internet, we see over the same 10 years slowing down to roughly a 5% compound annual rate of growth. Faster short term, because we're just now seeing television advertising starting to plummet, and the move onto these new advertising platforms. But we do believe once that swoosh takes place, that the FANG stocks will be rather mature companies. And as we said before, we're looking for the next FANGs.
So now maybe let's pivot and talk a little bit about fintech. What types of companies will be the beneficiaries of advancements in fintech? Will it be the big banks, financial institutions, or do you think some smaller players like tech firms who are acting right now as disruptors in the space?
But what we're seeing in the United States, for example, and I do think this will happen throughout the world, is the rise of digital wallets. Now, China was well ahead of us, and Asia generally well ahead of us. WeChat Pay and Alipay have hundreds of millions of people basically using them for their day-to-day banking needs, a branch bank in their pockets or their pocketbooks or handbags. And they've scaled enormously. We're just now starting in the United States. The two best examples are Venmo, owned by PayPal, and Cash App, owned by Square. So now in Cash App, you can get your paycheck. You can pay with through Cash App's debit card. You can buy and sell stocks. You can buy and sell crypto. You can get capital. You can get loans. Those are the traditional purviews of banks, or many of them are. I know crypto's sort of new and not allowed in many banks. So what we see is these digital wallets usurping many of the roles that banks play. So we're very cautious on traditional banks, again, depending on the regulatory environment, and very optimistic, especially hearing these cost of customer acquisition numbers. At the same time, the average revenue per user of these networks is rising. That's a powerful combination. We were delighted when MSCI selected us. I met MSCI when I attended an ETF confab, and one of the senior directors of the firm at the confab heard what we were doing in the innovation space And what she had seen in the ETF space generally was a little bit of spaghetti thrown up against the wall in terms of the ETFs coming out and focusing on innovation. Many people, I think, are very surprised that the two of us are collaborating, because for years I've said, trying to get people to listen to our story, look, the broad-based indexes are great when it comes to tried and true investment strategies. But the world is changing so rapidly. We have to have an innovation strategy.
Christine, MSCI are global leaders in index construction. So the idea of creating indexes on innovation themes really showcases how progressive MSCI is and has always been when advancing the indexing universe. Thematics and innovation investing were once kind of thought of as niche, but with a market leader like MSCI stepping into the space, it shows that thematics are becoming so much more mainstream. I can imagine, Christine, it's been quite a journey for MSCI to get to this point with your innovation indexes. So can you walk us through what led you to look at thematic investing with megatrends and innovations?
When we were out there looking at this space, we thought about thematic investing. So what is thematic investing? It is a top-down investment approach designed to reflect or capture those long-term, structural, truly transformative trends. So these could be macroeconomic, they could be technological. And, ultimately they're forward-looking, reflects that, trying to reflect that tomorrow's gonna look very different than the past and even today. So we were watching these themes and innovation, especially disruptive innovation companies in the market. And as they started to unfold, more and more of our clients came to us asking us about themes. And so, they were looking to us for solutions. So in 2018, we launched our first set of rules-based thematic indexes to the market. And then there was much interest and a lot of research and demand for us to, quickly add to that initial launch. So today we have about 20 standard thematic indexes under this rules-based methodology. There are a lot of customs and combinations as well. And these 20 standard include 5 indexes that were developed in collaboration with Ark Invest that focus on innovation and disruptive innovation. The MSCI, Ark Invest, and BMO combination is incredibly powerful, and so we could not be more excited about it and seeing it all come alive in the markets.
BMO's innovation ETFs are a terrific way to add innovation to your portfolio. There was a lot of fascinating information in this session about genomics, fintech, next generation internet, and autonomous technology. And BMO has an ETF which covers each of these themes. Or if you want exposure to all 4 of these innovation platforms, we have you covered. We have the BMO MSCI Innovation ETF, which has an equal exposure to all 4 of these emerging themes, which you can access in a single trade. Our 5 innovation ETFs offer liquidity, diversity, ease of use, and are cost efficient and really maximize exposure to each trend. I'd like to thank Cathie and Christine for talking to us today about investing in innovation. And for more information on BMO Innovation ETFs, check out bmogam.com/megatrends. Well, that was such an exciting discussion I got to have with Cathie Wood and Christine about innovation and investing in innovation and using ETFs to get that exposure. Here in Canada, BMO, we're not the only ones that provide exposure to investing in innovations. There are a lot of other providers out there, and we expect to see, more and more come to market as innovation investing becomes more understood and more popular. Of course, Ark Invest, they put innovation investing on the map, really, with Cathie Wood as a pioneer there. So these are active strategies. They're listed in the US, so they trade in US dollars. Ark's actually partnered with Emerge ETFs here in Canada, so they're sub-advising for Emerge ETFs. So essentially just listing those, the Ark strategies up here on the Canadian exchange. They trade in Canadian dollars, making them a little more accessible for Canadian investors. And then on that passive side, of course, BMO, we have our ETFs that we've used the MSCI Innovation Index as our rules-based approach. Evolve ETFs has been in the game for a while now, and they have some unique innovation platforms and a unique approach to that. They look at things like cybersecurity and cloud computing. Horizons ETFs also has a few tickers as well. But like I mentioned, there will be a lot more products coming to market in the next months and years. So we always just remind our viewers and our listeners, do your homework. Everything's online. That's the beauty of ETFs. They're transparent. Strategies and the philosophies and the holdings are all online. So just do your diligence and homework to figure out which innovation ETF is best suited for you. Kevin, we got a lot of questions this week. This is a really great topic. I'm not surprised. So maybe we should get started with these.
Thank you for that, Danielle. And thank you for the hard work you did there too. It's just amazing. You know, what we really like is each week we get great participation from the actual listeners, providing us questions we can review and actually discuss, and sometimes actually lead into content for the following week. So thank you for all those people out there that took the time and effort to send us a question. Now, one quick note I want to say to everybody out there too that maybe got in a little bit late to this session, no problem. There'll be a replay sent out to each of you, as well as the whole session will be available on YouTube within a few hours. With that, let's get into the questions. Danielle, can you please explain the difference between the MSCI BMO ETFs that you mentioned here versus the Ark Invest ones out there? Kind of give us the pros and cons of each and maybe why they're similar.
Sure. Well, they're both looking at investing in innovation, so that's a similarity. But the key difference here, Kevin, is active versus passive. So Ark being active and the BMO MSCI Innovation ETFs being passive. So on the active side, you generally see more concentrated portfolios. So for example, ARKK, which is Ark's flagship innovation ETF, has about 50 names in the portfolio right now versus Zin, BMO's innovation ETF, has about 240 names in the portfolio. So more diversification on the passive side, more concentration on the active side. So active strategies really make those single stock bets. You know, Cathie really likes Tesla. She's very popular for that bet. ARKK has over 10% exposure to Tesla versus Zin's largest holding is 5%. So those passive strategies are really about, Kevin, maximizing exposure to the trend and minimizing the single stock exposure. I'd say are the biggest differences there.
Thank you for clarifying that. Another few questions. You're absolutely right. So in this case, you know, we can't give advice or individual recommendations I set off the bat, but you know, what they're really looking at here is, can you suggest which leading innovative country to invest in now? And should we buy a China ETF? If so, why have they pulled back recently? Can you give us some just general background there, Danielle, please?
Sure, Kevin. I actually really like this question because it gives me a chance to talk about why a global perspective is so important when you're looking at innovation investing. And this is something, you know, BMO and MSCI, we like looking global. Cathie spoke to this earlier about wanting to look global. And I think a really great example that we all just listened to was when Cathie talked about fintech and how digital wallets and mobile payments really took off in China well before North America, and they're so well ahead of us there. And you know, she referenced some companies like Alipay, WeChat Pay. I was just reading about this morning. They have 300 million users. Think about that. That's massive. So again, that global perspective is an important consideration, we believe, to accessing these innovations and maximizing exposure to the trends.
Thank you for that. There's a reader, or listener, I should say too, that's started to do their own research on blockchain, and then we're going to recommend everybody research themselves. So moving past that, key question here is, outside of Bitcoin and other cryptos, can I get access to disruptive innovation that blockchains appear to represent? Daniel, thoughts here?
Yeah, we're getting a lot of investors looking at trying to get exposure to blockchain as their sort of crypto exposure in portfolios. Looking to fintech is a spot where investors can look, and just using ZFIN, BMO's fintech ETF, as an example, there's a sub theme in there which is blockchain, and there's about 23% exposure to blockchain technologies and peer-to-peer networking within the fintech space. Evolve has a cloud computing ETF, so I would expect there to be exposure to blockchain within that ticker as well. There are more pure play blockchain ETFs in the market, but again, just do your homework, do a little bit of research there, because every ETF is made a little bit differently, or a lot differently.
Agreed. Do research. Thanks for that, Danielle. A couple more questions here. You know, this listener here knows that technology. We know that technology yesterday is rapidly being replaced by technology of today, as Cathie kind of talks about. It seems that the life cycle of technology seems to be a lot more shorter these days. So really the key part of the question is, how do you know when it's time to move out of the old and go into the new, as were? Danielle?
Kevin, I think that's a really good example of why an index approach can be so useful, because an investor doesn't have to make that decision. The rules are set. So indexes rebalance. And as they rebalance, they're constantly adding or subtracting, adding the most relevant names and subtracting the least relevant names. So as companies become more relevant within a certain technology or a certain innovation, their market share in the index will grow, or their weight in the portfolio will grow. Or if they're becoming less relevant, then they might be deleted, or that portfolio weight will go down a bit. So always evolving with that index approach. Secondly, I might just highlight, you know, we got to talk to Cathie about her view on the FANG stocks, and she made a good point there where, you know, she still thinks the Apples and the Amazons of the world are going to be relevant in the future, but they will be mature. So just those different growth profiles with the more mature companies versus the up and coming ones.
Thanks for that, Danielle. Let's get to the next question. You know, and this is speaking more about the experience of Loss Well. You know, if innovation is such an important area of investment, can you please explain why the technology stocks have taken a hit over the last 2 months? And again, we can't give individual recommendations, but, you know, I think what they're really trying to get at is that this is a stay-at-home digital era, and there's really been unlimited growth in here for people to adopt technology. Why the fluctuations, I guess? Danielle?
Well, we've been in this stay-at-home digital era now for now over a year, and this actually really did turbocharge these companies. They had a tremendous year last year. You know, this is kind of why Ark really got put on the map, because they were investing in these companies, and they had such a great year. A pullback in the last couple months. Well, Kevin, we know, you know, markets don't just go in one direction. They don't just go straight up, right? There's a few macroeconomic factors at play, you know, some rising rates in the middle end of the curve there, putting a little bit of pressure on these growth-oriented stocks. But remember, the investment thesis around innovations is this long-term view, this long-term structural growth trend, looking out 5, looking out 10 years to really see these growth stories play out. So being a little more myopic or looking in the near term, quarter to quarter, is not probably the best lens when we're approaching these strategies. You really want to look at what they're going to do long term.
Thanks for that. And I'm going to thank everyone for taking the time to send us those questions in, and we really appreciate that. Again, one more time, it really does help us as we go week to week to set the content on the weeks ahead to beyond answering your individual thoughts, because it gives us your thoughts, what you're looking for insights. Now, each week we run the Market Insights webinar, and we have it Friday at 1 o'clock. What's our topic for next week? Our topic for next week is Canadian equities. You can, of course, register and send this information off to your colleagues and friends to register at etfmarketinsights.com to get access to that, and you get access to the series of sessions going forward. And with that, I want to thank the guests today. I want to thank you for joining us in this session. And I want to quickly close out with one more reminder that this session was provided for information purposes only. Any reference to any particular company or product was really for illustrative purposes only and should not be construed as investment advice or recommendations to buy or sell. Particular investments or trading strategies, of course, should be evaluated relative to an individual's investment objectives, and professional advice should be obtained with respect to any circumstances. Thank you again for joining us this week. Look forward to having you in next week. Cheers.